Well, it is true that a market system does not pay as well in some activities as might seem appropriate for the importance of those activities to society. Just take teaching, for example. I mean, teaching does not pay well. And what could be more important? I mean, you've got to be as interested in who the teachers of your children are as who your accountant is, or whatever, or who's winning the heavyweight title of the world, or that sort of thing. But it doesn't pay well, and it's a fundamental choice whether you're going to go into something. For many people, it'd be a fundamental choice whether you're going to go into something you love or something to try and make a lot of money. I think that generally it pays to go with what you love. I think that it's very hard to find people when they get to be my age who say that they've loved what they've done all their life and feel it was very worthwhile, but they're terribly sad they made that choice because they didn't make a lot of money. I don't think anybody's ever said that to me, that they wish they'd gone into something else where they were uncomfortable doing it or didn't enjoy it, didn't feel very productive, but made a lot of money. So I don't think you'll find that. So I would go to work in whatever turns you on. It may turn out that it'll be more profitable than you can think, but almost everybody here will make enough money, unless they get some terrible habits along the way, to do reasonably well. And doing reasonably well in this country really is pretty darn good. I mean, it's not necessary to have huge amounts of money in order to enjoy yourself. I enjoyed myself when I had my $10,000, and I live in the same house that I lived in when I had about that. I bought it 41 years ago. I liked the house then. I like the house now. I mean, if you think about it, if you have a reasonable job, you'll be eating at McDonald's and I'll be eating at McDonald's. So we're to push on food. I mean, in fact, I hope it's Dairy Queen, actually. And and if you come to Dairy Queen, you'll see me. And you can order anything on the menu I can order, and we both can afford it. You'll wear the same clothes I wear. I'll pay more for my suits, but as soon as I put them on, they look cheap on me. So we'll look about the same. And we'll both live in the same kind of houses. I live in that house from 41 years ago, and it's warm in winter and it's cool in summer and it's comfortable. And you'll live in a house that's similar. And what difference does it make if you have 50 more rooms or guest houses or all that? It'll probably just bring you problems. I mean, you have to worry about the greenskeeper or something when you get through. So I have been in the houses of people where the houses are worth probably 200 times what my house is worth, and I would not be any happier in those houses at all. In fact, I'd be less happy. I just have one more thing to worry about, and the dozens of people around the place, and people quitting, and people stealing from you, and all kinds of things. To hell with it. We'll drive the same kind of car. In fact, you'll probably drive a better car. I drive a car that's about 8 years old. I don't know what it's worth now, but it gets me around fine. I mean, I'm perfectly happy. We'll watch the same television. We'll work on the same computer pretty much. The only difference will be how we travel long distances. I will fly in a plane that's more comfortable than flying Southwest Airlines or something, which I've got nothing against. But that's the one real big difference. And other than that, I do what I like every day. I hope you'll do what you like every day to do. And I work with nice people. I hope you work with nice people. And there's 24 hours in the day, and those are where the hours go. So great wealth is the tiniest bit different in a real sense than having just a decent income. And to trade a decent income and something you love doing and something where you feel worthwhile doing it for huge wealth where you trade off a lot of your principles would be a terrible mistake. For what? To secure their financial future?
For youth.
Youth? Oh, well, it's not very complicated. It goes back to getting full use out of your own talents first. I mean, the difference between whether you're going to be earning X or 2X or 3X a year 20 years from now is going to be a function of how well, not how much talent you have, but how well you use the talents you already have. And so that is your best financial future is your own ability and your a capacity to use those abilities to their potential, and that can't be taken away from you. They can't even tax it. I mean, most things, if you own a piece of real estate, if they double the taxes, they double the taxes, and that changes your ownership in the property, because now, in effect, the taxing authorities own more of it because they've got a greater command on the revenue stream. The same thing about almost any asset you have, but they don't tax what's in your head, and they don't tax your ability to start performing when you get to work in the morning and finish in the evening to your potential. One of the things that amazes me is how people who really do perform well just sort of jump out at you once you're running a business. When I got out of school, I thought, everybody would behave that way, but they don't. Most people sort of go through life in a sleepwalk, and if you don't, you will stand out. So the biggest thing for your financial future is yourself. Now, beyond that, it is always being ahead of the game rather than getting behind the game. It's saving a little, no matter how you do it. I mean, I delivered papers, I worked at Penny's, I sold golf balls, I had a pinball machine around. I did a lot of things that enabled me to accumulate about $10,000 by the time I got out of school. 10,000 doesn't go as far now as it did then, but having anything so that you're ahead of the game and not getting behind the game is enormously important. I mean, just, if you're going to run a 100-yard dash against a bunch of people in life, if you can figure it out so that when the gun goes off, you're 10 or 15 yards ahead instead of 10 or 15 yards behind, it's going to make an enormous difference in how that race comes out. So having some net resources doesn't make much difference whether they're in stocks or bonds, in my view, but and not having debt when that gun goes off when you get out of school is a huge plus over being behind the game. And it may come from delivering a paper out in the morning, it may come from part-time work someplace, but put aside a few dollars for yourself so that when the time comes and you enter the workforce, you're ahead of the game and not behind. And then once you get there, don't get behind by buying a whole lot of things that you figure you're going to pay for someday while you're paying 20% interest in between.
Wondering, how do you decide what you invest your time and money in?
Yeah, well, I like to find businesses that have good economics. Now, what are good economics? Well, good economics are a business that has some kind of a moat around it that makes its product or its service or its location or something a little more desirable to the customer than any other sort of comparable product. The number one candy bar in the last 30 or 40 years has been Snickers. People don't fool around with different candy bars. They fool around with different length dresses. They fool around, with all kinds of things, but they don't fool around with candy bars because they figure, they're going to go in and lay out 50 cents or whatever it is and put it in their mouth. And they're not going to, for 50 cents and putting it in your mouth, I mean, you're not going to say, I'll lay out 45 cents and put something else in my mouth. So you find that very stable. And we like businesses that we think we can figure out where they're going to be in 10 or 15 years. I don't know where the information technology businesses are going to be in 10 or 15 years. I know where Snickers bars are going to be in 10 or 15 years. They're going to be selling just about this, the way they do now. I know where Wrigley's gum is going to be in 10 or 15 years. There's not going to be a lot of innovation in chewing gum. And the internet's not going to cause people to quit chewing gum either. I mean, at least, Gates may think so, but I don't think so. But it's predictability regarding the sustainability of a competitive advantage, something special about a product. So we look for those kind of products. And then we look for people that are running the business that are honest and able. It's easier to find people that are honest and able than it is to find businesses that are going to stay wonderful for a long period of time. There are a lot of businesses that looked like they were going to stay wonderful that really evaporated over time. But that's what we're looking for. And the nice thing about it is we don't have to find very many. If we find one a year, that's terrific. Because you don't need 100 or 1,000 great investment ideas to do well. You need a couple. And the discipline is the most important thing. We don't need brain power. We need discipline. You don't need 150 IQ to do what I do. Thank God. You don't need 140. You don't need 135. You may need 115 or something like that. But you do need discipline. You have to wait until you see the fat pitch to swing at. because investing is a no-called strike game. You know, if I were a baseball player and I only like pitches 2 inches above my navel, you know, some guy could learn that and he could pitch me, you know, 3 or 4 inches below that, and I get called out on strikes because I never find a pitch I like. You can get called out on strikes in baseball. You have to swing at pitches that you don't even necessarily like, particularly after the count gets to 2 strikes. In business, you don't have to swing at anything. You can sit there and the paper says General Motors at 68, or it says General Electric at 115, or it says General Dynamics at 63. And if you don't like those prices, you don't have to swing. You can wait there day after day after day after day, and there are no called strikes. Now, when you swing, when you decide to buy something, then, you know, if you swing and miss, it's a strike. But it's a marvelous game to be in because there are no called strikes, and you can simply wait for that one time in a month or 6 months or a year or 2 or 3 years when you really know what you're doing, where you like the price, where you like the people running the business, and then you swing, and you only need a few swings in your lifetime. So that's the way we try to pick businesses. We try to stay with things we understand. I mean, there can be all kinds of wonderful investment opportunities out there that I don't understand. I don't know what cocoa beans are going to do next year. You know, maybe you know, but I don't know. I don't know what crude oil is going to sell for. But I don't have to know. I just have to know the things. I have to know what I know. I have to know where the limits of my understanding are, what I call what my circle of competence is. And if I'm only able to evaluate 5% of the businesses in the world, no problem. I just stay within that 5% and try and find something. And that's, most people get in trouble because in investments because they get itchy. You know, they can't discipline themselves, and they hear about other people making money. Nothing upsets people so much as to hear about their friends making money. I mean, that's very destructive to discipline because they think, I'm smarter than that guy next door, and he just bought that new car with the money he made trading stocks on the internet, so why can't I? Well, the answer is you can't over time. You will lose money if you trade stocks actively. And it's hard to exercise the discipline. But anytime you buy something, you should be able to take out a one-page sheet of paper and say, I'm buying General Motors at 65. I'm buying General Electric at 150 because. And you should write down the reasons. If you can't fill out the sheet, if it's because somebody told me about it at a cocktail party last night, that's not good enough. If it's because my broker told me about it, that's not good enough. You've got to have a reason for thinking that it makes an intelligent investment. You do the same thing if you're buying a farm or an apartment house. If you're buying a farm, you'd say, I'm buying this farm at $1,000 an acre because I think I can earn $60 an acre on it. If corn sells at such and such, and soybean sells at such, and yield is such and such, then you figure it out. That's the same reason you buy businesses. And when you buy stocks, you're buying a little piece of a business. And that's probably the most important thing to remember in investing, is that when you are buying a stock, you're buying a little piece of the business. And if you are buying it at an attractive price for the business, for the whole business, you're going to make money. And if you aren't, over time, you won't make money.